In today's video, we're going to be looking at something really important in the cryptocurrency investment or any form of investment you are trying to do, whether in the cryptocurrency market or in the stock market. Now, what is that? I'm talking about what? Risk management. Guys, risk management is very important because most of us make investments out of emotion or how we feel or how someone told us about particularly a cryptocurrency or any kind of asset class we wanted to invest in. But not understanding risk management can make you pay dearly for that emotion. Because why? If you don't use risk management, you can actually lose everything. Now, this same thing has happened to me because last year, 2021, someone told me about a particular token that Mark Cuban invested in. Now, guess what? Out of excitement or out of FOMO that Mark Cuban have actually invested in this particular cryptocurrency, I jump into that cryptocurrency asset. Guys, guess what happened to me? I lost my money. I lost about what? $6,000. But I didn't mean I applied risk management. It won't pain me that much, or I won't lose as much money that I lost in that particular cryptocurrency. But in today's video, I'm going to be showing you a proven strategy that can work for anyone, even if you're a bad investor, even if you are wrong at investing, or even if you know how to pick the wrong things. Guys, with this strategy, you won't make a mistake, and I can tell you, you will always come out in profit anytime you invest in any cryptocurrency asset. Now, let's get straight into the video. Welcome to Deep Tutors. We focus in making videos that are good for your pocket. As you can see, all the videos we have in our channel. Now, these videos are very good for your pocket. Coin reviews, talk about airdrop and different things that we'll talk about in this channel. All you need to do is to like our videos, turn on the bell notification, and subscribe to our YouTube channel. And don't forget to join our Telegram group in the description. Check the description of this video and join our Telegram group. Now, let's get straight into the video so you will learn something about risk management. Risk management in investing in crypto. Guys, I'm going to be taking you in this presentation, sharing with you the wealth of knowledge, a strategy that I've been working for venture capital companies on risk management. Not only them, even the top investor we know, which is Warren Buffett, apply the same strategy. Let's get straight into the video. Now, before we go straight into the video, I want you to understand I'm not a financial advisor. I'm just a guy on the internet sharing my view about something that I know and share with you things. Now, everything I share in this YouTube channel is only educational purposes only. I am not a financial advisor. If you're looking for someone to advise you on how you can invest or any other thing, you need to get a financial advisor for yourself. This is just a disclaimer so you have that in back of your mind. All right, risk management is the success and failure of any investment. I keep telling people, if you get this thing wrong, you can never be a success investor. Or even if you're a trader, if you don't apply risk management, you might not even make money in trading or even in investing. It works in every industry as far as investing or trading is concerned. Now, FOMO and hype is usually the cause of lack of risk management when investing in crypto. Also, going all in one crypto project out of hype without planning the risk and you lose it all. Now, this can cause a lot of emotional problems. Guys, like I told you the story of when I invested $6,000 in a particular cryptocurrency that I heard that Mark Cuban has invested in it. Guys, I paid dearly for that. Because why? I did not apply risk management. It cost me $6,000 loss for that mistake I just made. Now, I was investing out of emotion. So what I want to share with you in this video is not for you to invest emotionally in any cryptocurrency asset you see. You need to understand that you need to plan yourself very well and apply proper risk management. Now, understanding risk management, you need to understand what we call an edge. Now, before that, I'm going to share with you what an edge means so you know what is an edge. Now, knowing that all investment is what? Unique. For example, if a particular coin did 100x, is not a guarantee that the next coin will do 100x. Now, I see some people in crypto, because of what happened to Shiba Inu, so many cryptocurrency developers start creating different things and calling it the next Shiba, that even some people say that it will even flip Shiba. Now, I'm not trying to say that they can't do that or they can't achieve that, but people see all these claims and out of that, they go into those cryptocurrency out of FOMO or overexcitement that this particular cryptocurrency is going to overtake Shiba. It can happen, but it also have tendency of not happening. Now, having this in the back of your mind helps you to plan your investment, not for you to go all in one particular asset and lose everything. Like what happened to Luna. So many people believe so much in Luna that they thought that nothing can happen to Luna. I wouldn't blame them because of what Luna was doing. Everybody was in love with Luna. Now look at what happened to Luna. Collapsed. Now that doesn't mean that other layer 1 blockchains are going to collapse like Luna. It's not true. Another different thing can still happen to them. I want you to have that in the back of your mind. Now, what is an edge? What is edge? A trading or investing edge is a technique, observation, or approach that creates a cash advantage over other market players. It doesn't have to be elaborate to fulfill its purpose. Anything that adds a few points to the winning side of an equation builds an edge that lasts a lifetime. Now let me explain to you an edge in layman's understanding. Now an edge means your strategy. Now let me also say your rule of engagement. Now what can make you to buy a particular cryptocurrency? Now it means that the signs you need to see for you to buy a particular crypto, or the signs you need to see for you to enter a particular trade. You can also call it investing edge or trading edge. Is still the same thing. Just what helps you to take make better decision in the financial market, whether you are trading or whether you are investing. Now some of the edge some people look at when it has to do with investing is team. Some of you will be like, oh, I will not invest in cryptocurrency that has anonymous team. No, some people will be like, I will only invest in cryptocurrency that is talking about DeFi or NFT or GameFi or any other niche of your choice. Like me, for example, I haven't invested in Move and Earn. I've not yet understand what that industry is like in crypto, but that doesn't mean that other people does not invest in it. Other people invest in it because why? It might be in their own edge to invest in it. So it's not yet in my own edge. So understanding edge will help you to become a better investor. Not investing in anything. There are some people, if you tell them about shitcoin, they will never invest in shitcoin because of what? They know that those things are a gamble. So they don't invest in gambles. Some people focus only in Bitcoin, while some people focus in Bitcoin and Ethereum. Now these are investing edge that can help you win in the financial market. Now another thing you need to look out for is VCs and partners. Some people, before they invest in cryptocurrency, they check out the VCs and the partners of those cryptocurrency. Also some people check out the solutions that the cryptocurrency is solving, the network effect, and the social sentiment, talking about the social buzz, what people are saying about that cryptocurrency, and how people are excited about it. Now these are all edge, and it can help you to become a better investor. Now let me share with you a strategy that works when investing in the financial market. Now this strategy works every time. Like even if you're a worse person in investing, applying what we call risk management, understanding your risk, you are going to win in the financial market. Because if you don't do that, you are a gambler. Now, you know what happens to a gambler? A gambler loses it all. As a matter of fact, if you are investing in cryptocurrency or investing in stock, you need to apply risk management so that on the long term, you are going to win. Because why? All the cryptocurrency you are buying right now, 90% of them have the likely chance of failing. Now, it's only few percentage of them can win and make you the big gains. Imagine when you did not apply risk management in all those cryptocurrency you have bought. Guess what? You can't even make money. Even the one that make you money can even be kind of for you to recover what you have invested. But applying risk management in all of them can make you win big time in this financial market. Now let me say, for example, I did a research of 10 projects in any niche of my industry. I can do research of 10 projects in DeFi or layer 1 blockchain or layer 2 blockchain or GameFi project. But let me take, for example, I choose DeFi projects. Now I do analysis on 10 DeFi projects that I want to invest. Now let's say I have only $1,000 to invest. Now out of that $1,000, I will invest $100 on each of those projects. Now because I have 10 projects, I will invest $100 on each of those projects. Because why? I don't know which one will win tomorrow. No one would have believed that Luna will crash after all they have built, all the ecosystem they have built. No one would have believed such kind of thing that happened to Luna. Let me give you a scenario here. Let's say 6 of those projects that I invested, remember I bought in 10 crypto projects. Now I invested $100 on each of them. Now let's say 6 of them failed. 6 of them failed. What does that mean? It means I have lost $600 and only 4 of them were success. Now let me show you the math that will blow your mind. Now looking at this kind of investment, someone that invested in 10 things, 6 out of 10 were failure and only 4 wins. In school, I can tell you a failure. Corporate world, where if you're working, you're a failure for making 60 over 40. But in business, you're not a failure if you apply risk management. Because why? Whenever you lose a certain amount of money. But whenever you win, you're going to win big. I'm going to be showing you in this video. Let's get straight into it. Now, let's say whenever I lose $100. Now, whenever I win, I make 10x of my money. Now, remember, 10x is one of the easiest things you can get in crypto. Some crypto can go as high as 20x, 50x, as much as 100 to 1000x. We have seen that happen in cryptocurrency. Now, let's say I invested in 10 projects. Now, 6 of those 10 projects were failure, and only 4 win. What does that mean? It means that I have lost $600 from those 6 projects that was failed. Now let's do the math so you can understand how this strategy can help you. Now 6 of those projects that failed, multiply by 100, making it a total of $600 investment lost. I have lost the money. Now 4 of those projects that win. Now remember, each time that I win, I make 10x of my money. That means my $100 will be $1,000. Now multiply it by 4, making it a total of $4,000 win. Guys, are you seeing this math? Now at the end of it, I have a net profit of what? $3,000 US. Now looking at the mathematics or my failure rate, I have a failure rate of what? 60%. I have a win rate of what? 40%. But because of risk management, I was able to be in profit. Because why? Whenever I lose $100. Whenever I make profit, I make $1,000. Now each of those ones that win were only 4 projects. 6 of them were failure. Each of those 4 projects gave me $1,000 each, making it a total of $4,000 and a net profit of what? $3,000. Now guys, imagine that I'm investing any amount of money in those projects out of FOMO. For example, out of those 6 of those projects that was a failure, imagine that I heard that somebody somewhere is as partner with that particular cryptocurrency, and guess what? I will use all my money to invest in that particular cryptocurrency. Let's say, for example, I have $1,000, and one of those cryptocurrency that was a failure, I put 500. Another one I put 300, and those ones that win, I only put $50. Imagine how failure investments I just made. So, but understanding risk management, no matter the news, no matter the hype going around in any particular cryptocurrency, all you need to understand that it has potential of what? Failing. Anything can happen. The CEO can just wake up one day and say, I'm not doing again. I'm not going to be building again, like what happened to Phantom, when Andre left Phantom team. Now, I'm not saying that Phantom is going to fail, but I'm just trying to tell you things that are possible in the financial markets. So you need to also protect yourself and know that as you are betting on those companies, also try as much as possible to protect yourself so you will not lose everything. So have a proper risk management whenever you are investing in cryptocurrency. Always invest rightly. Don't invest out of emotion because of what someone said. Because why? At the end of it all, some of these projects have the chances of failing, but proper risk management can save you. All right, now I want to show you a practical example of venture capital companies that invest in stocks. Now, I always tell people nothing is new under the sun. Now, what you don't know is just an ignorance, but that you don't know it is the more chances that you even make mistake in those things. So I'm going to be showing this strategy is working for venture capital companies, and this is the same mindset they have whenever they are investing in cryptocurrency. Now let's get straight into that video. Guys, this is a book called Psychology of Money. Now I recommend each and every one of you watching this video right now to go and buy this book and read it. I can tell you, you will learn so much about financial markets from this video. It's one of the books I've been reading in this bear market, learning so much about investing and how to manage my risks. And I want to be showing you some of the things I saw in this book that I say I need to share with you guys so you understand the importance of what? Risk management. Now let's read it together so you can understand with me. Take venture capital. If a VC makes 50 investments, now listen, 50 investments, they likely expect half of them to fail. Now guys, they expect half of their 50 investments to fail. That is 50% of what they have bought to be a loss. Now 10 to do pretty well. Only 10 of those stock will do well, and 1 or 2 to be a bonanza that drive 100% of the fund's return. Investment firm Correlation Ventures once crunched the numbers. Out of more than 21,000 venture financing, from 2004 to 2014, 65% lost money. Guys, you need to understand this. This is 65% were lost of money. You need to understand this. Now listen to the next paragraph. It says 2.5% of investment made 10 to 20x. Now 1% made more than 20x return. 0.5%, about 100 companies out of 21,000 companies earned 50 or more. That's where the majority of the industry return come from. Guys, you need to understand that risk management is everything. Like I said, you can invest in 10 projects and 6 of those 10 projects can be a failure. Even 8 can be a failure. Imagine if 8 was a failure, you only lose what? $800, for example. Now only 2 were a success, and those 2 were able to give you only 10x minimum. You are in profit. You have made $2,000, and if you remove your capital, which is $1,000, you have a profit of what? $1,000, guys. Now risk management is everything. Risk management is everything. You need to understand that. Now I'm going to go more to show you some of the things that happened to companies in the past and what Warren Buffett said about investment. I'm going to be showing you all these things in this book called Psychology of Money. Follow me. Okay, I want to read another paragraph for you so you understand the importance of risk management, that any company can fail. Let us not be emotionally attached to any form of cryptocurrency or anything that we hear in the financial market. Let us all apply risk management. Now listen to this. JP Morgan Asset Management once published the distribution returns for the Russell 3000 index, a big broad correction of public companies since 1980. Guys, I want you to pay close attention. 40% of all Russell 3000 stock components lost at least 70% of their value and never recovered over this period. Guys, now before you can come into Russell 3000 index, guys, you need to be a big company. You need to know your onions. Now imagine 70% of those companies that was a failure. Imagine when someone share an idea to you in cryptocurrency, and because of how you feel, how you are emotionally attached to those ideas someone shared with you, you went all in that particular cryptocurrency. Guys, you can lose a lot of your money. I can tell you, all you need to do is to apply risk management in everything you are doing in the financial market. So I'm going to be showing you more things in this book so you can actually learn something. But one of the things I would recommend for you is for you to buy this book and read this book for yourself. You have a lot to learn from this book. Okay guys, I also saw another paragraph that I wanted to share with you from this book called Psychology of Money. Now is something really interesting, and I want you to listen as I read it. Now look at this. The interesting thing here is that you have to have achieved a certain level of success to become a public company and a member of Russell 3000 index. These are established corporations, not fly-by-night startup. Even still, most have lifespan measured in years, not generation. Guys, you can see what it takes to become a Russell 3000 index company. Imagine, for example, what happened to Luna. Imagine what it means to come to $30 billion or even $50 billion market cap in the cryptocurrency space. It was a project that everybody was believing in. For you to know that anything can happen to any cryptocurrency at any time makes you to apply risk management in any form of investment you are doing. Now I want to show you a story of like Luna, one of the companies in Russell 3000 index that achieved massive success, and how they hit one of their downtime and they were out of business. I want to show you that story. Let's go together. You can see, take example of one of these companies, Carlosco, a former member of Russell 3000 index. It produced some of the biggest films of the 1980s and 1990s, including the first 3 Rainbow films, Terminator 2, Basic Instinct, and Total Recall. I even watched some of this movie. Now look at something really interesting that happened to this company. Carlosco went public in 1987. It was a huge success, churning out hit after hit. They were hitting success back to back. It did $500 million in revenue in 1991, commanding a market cap of $400 million. Big money back then, especially for a film studio. Now guess what happened to them? And it then failed. Guys, now if you read the end of this story, the writer said that this company stock went to zero. It kind of what happened to Luna. Guys, I want you to understand something, that this is financial market. You shouldn't be emotionally attached in your investment. All you need to do is to find a way to protect yourself by applying risk management in everything you do. Now I want to show you something that Warren Buffett said that is so shocking. Now this is amazing. He said that throughout his lifetime, he has invested in only 400 to 500 companies. Now I want to show you that from this book, and if you buy this book, you're going to learn a whole lot when investing in cryptocurrency. Okay, now this is what Warren Buffett said, and I want you to pay close attention as I read this. At Berkshire Hathaway shareholders meeting in 2013, Warren Buffett said he owns 400 to 500 stock during his life and made most of his money on 10 of them. You know, guys, this is very, very important. You know, he said out of all the stock he owned, most of his money, all the $80 billion you are seeing today, or $90 billion, I don't really know the figure, he said only 10 of them were a success. Now the question you need to ask yourself, does he mean that Warren Buffett doesn't know how to do diligence that made him to have a failure in all of them? Because looking at the percentage of the success rate of the investment is about 90% failure. Guys, 90% failure, guys. You know, but because he understands risk management, he wasn't investing out of emotion in all these companies. He was applying risk management in all of them. All of them, he was applying risk management, and those 10 gave him the biggest return of his life. Guys, as you have seen, that risk management is something really important. You need to pay close attention to risk management, understanding that you don't need to invest out of emotion or out of what someone said about any particular cryptocurrency. Even if someone tell you that a particular cryptocurrency is going to go to the moon, yes, it is true, but you need to also protect yourself if it doesn't go to the moon. Because why? This is some of the things we see in cryptocurrency. When people tell us that a particular cryptocurrency is going to the moon, we are all, you know, about the moon. We don't understand that anything can just go south and we'll lose everything. Thank you for watching this video. If you learned something from this video, I want you to drop a comment in this comment section, and I can tell you next video is going to blow your mind. All you need to do is to like our videos, subscribe to our YouTube channel, and turn on the bell notification. Thank you, and see you next time.